All right, so let's talk about the TD indicator. And this TD indicator is described a little bit in my website under onlibertylifetrail.com. And if you haven't fully read the Learn Trading section, you really want to get to it. All these links are useful. And in the last section, I talk about time analysis. And there are some really good indicators here, including the time to market indicator and how it's used. So here's the first link for the time to market indicator, probably my favorite article on the time to market indicator. So you definitely want to go ahead and read this. And it shows you the very basic rules right here of how to recognize a TD setup and a TD countdown right here. Another good chart, or not chart, but there's other good articles, but then right here, TD sequential math rules. So you want to take a look at that one as well, which is also a really useful one, and it's just a quick overview of the very simple math. Now, normally, a lot of people don't know about the TD indicator, and which is why most people only familiar with it from a Bloomberg terminal, but that's $2,500 a month. But a simple way to get the indicator is to write your own code in TradingView. So here's the code. So you go ahead, you can write that, and you can program those rules in. Now, of course, that still sounds easier than it really is, and other people have tried to program it as well. So if you go to indicators, you can kind of search for it and then see what other people are giving away for free. But let's talk about how it's used and the most optimal way of using the code. So there's many ways to explain it, but what you have to realize is that the best thing about this indicator is that it's used on multiple time frames, but it's most useful on higher level time frames. So I've never seen it used below the daily. So I've only seen it used on daily, on weekly, monthly, and even yearly. But like the higher the time frame, the more useful it is. So for this, I'm just going to talk about the weekly and the daily, but you can always zoom out and look at it on a monthly level. So the way I normally start explaining it is to get a 9. I mean, 9, this is the setup. This is the TD setup as explained right here.
Hey, Tone.
Yeah, go ahead.
I actually can't see your screen.
Oh, my bad. Shoot. Knew I forgot something. There you go. Hey, there you go. All right.
Awesome.
Oh man, yeah, I said that earlier, but you didn't miss anything. So these were the articles, and this is the section, the time analysis section. But the video has it, so there we go. Killing two birds with one stone here. I knew I forgot to do something. All good now. So you're good, right? All
Yep,
right,
I'm
sweet.
good.
Perfect. All right. So, where was I here? Yeah. So let's talk about the TD sell signal. So the TD sell signal is the 9 consecutive price bars that close greater than 4 price bars earlier. So in a very basic way, in order to get a 1 right here, on the week of 8/29, the close of this bar had to close higher than 1, 2, 3, 4 price bars earlier, and you get a green 1. So at this point, you're kicking off the setup, and the setup goes into a 9. Now, the code shows you a 9 with a red arrow. So how do you read that? How do you read the 9? So to me, when you see a 9, and you hold all other things equal, and in reality, all things are never equal. But for starters, let's hold all things equal, and you got a 9 sell indication, which is a green 9. So all things being equal, you have 3 equally likely possibilities. One is this sell indication gets ignored and you continue straight up to the upside. Another possibility is a 1 to 4 candle correction, in this case 1 to 4 week correction, and then you continue to the upside. And the third possibility is this 9 leads to a complete reversal in trend that eventually reverses on a 9 in the opposite direction to help you time the rebound. So even with 3 of those things being equal, you can see that 2 of them are telling you to be careful and to get out of this position and look for a some kind of a correction. So you can either take profit from your bullish trade and potentially look for shorting opportunities. And if those shorting opportunities are longer than 4 candles, then you stay with the bearish trend or potentially even add to your position. Okay. Now, how do you know that this 9 is a continuation in trend and not a reversal? Well, even if you took your profits on this 9 right here, the week of 2016, 10/24 on Bitcoin, you go back into your trade when a green number starts trading above the previous green number. Okay, so there is one thing here. This is a slightly different version than the traditional Tom DeMark indicator. And the one major difference, and it was initially coded by accident, but I left it in there because I like it, is that in the traditional Tom DeMark indicator, you can't have a new uptrend starting with a 1 following a 9. So when you look at the traditional, textbook for Tom DeMark, and you can find it on the internet. Let me open it up actually. So there is a book by Jason Pearl, and in this book, it's a nice 300-page book. Plenty of reading that could be done here. And in the book, so the book looks like this. In the book, this would be a skipped candle. So because it's a skipped candle, their count starts on a 1 over here. But the rule is the same. If you exit it and the price continues to rise, you enter back in when a green number starts trading above the previous green number. That's your sign to jump in the market, okay, to go back in. Okay, and we're going to talk about the countdown later on, but let's just stick to the setup. So you can jump back in on the setup either way here, because even with my code, this 2 never traded above the 1. And I want to see it trade significantly higher. I don't want to see it trading by like $1 higher. I want to see, significantly higher. Now it's up to you as the trader if you want to wait for the candle to close or you want to jump right in. I tend to jump right in. But when this candle started trading intra-week higher than this candle, that's a sign that this 9 never led to any pullback, and it's time to jump back in and go. Okay, so I got a heads up that there is another 9 over here, but the textbook will tell you that the 9 was coming here, which would have been a better sell. Now, there's a couple of things that I like. I still like to combine this indicator with traditional markets. So that means the one thing I look for on these 9s before I get out of the trade is a reversal candle. And I have my favorite reversal candles, and I talk about them on my website as well. I have a whole graphic for candles right here. So I'm always looking for, I'm not a big fan of the hanging man, but a shooting star, a gravestone doji, a spinning top, or just a regular doji. So these are my favorite reversal candles that I look for. And when I don't see a reversal candle, I am not really in a rush to get out on this 9, and I also know that I am one candle ahead of the traditional teachings of the TD indicator. So when this week comes right here, I am expecting a 1 to 4 candle correction, which in this case is weeks at a time. But because you have a lot of time to get out, this is where I like to zoom in. And this is where the daily can also help you. So let's go into the daily and check out what did the daily look like the week of 12/26 and the first week of the year 2017. So here's the daily. I will have to, this is the current daily, so I have to go back about 10 months here. So let's scroll back in time. And try to get to the beginning of the year. April, March, February, almost there. Here we go. So that's what we look like in the beginning of the year. Now that candle started on 12/26. So over here, we also have 12/26. Now notice that the first day of this week was a 9 on a daily candle. But there's two things going on there. So for starters, this 9 has an orange arrow and not a red arrow, which is the difference between a perfection cell and a regular cell, as far as my code goes. Okay. Now in reality, it's not that big of a difference. A cell is a cell. I don't put that much stock into separating them. But what I do care about is the fact that I know my 9 is coming a week early. And this is a Monday. So there's still plenty of time to go. So even if you got scared right here on the 9, there was still you can still, as a trader, you can recognize, hey, this 9 did not lead to any correction. We immediately went straight up. So you can certainly jump back into the market. Or you can wait for your weekly chart to have some kind of a weakness, which this didn't have. I mean, it's a straight up candle. So whether you exited right here or you stuck around, either way, look at how amazingly timed the next setup was. And once again, I am one candle ahead of the book because this would have been a skipped candle and this would have been a 1 and the 9 would have come on one candle later. But I already had a heads up and I was notified, hey, there is a 9 on this giant blow off top candle that took place on January 4th. That is coinciding with a 9 on a weekly level because this candle started on January 2nd. And this is what I look for in order to properly time my trades. Now, I can even zoom in to the 4 hours and take a look if the 4-hour or the 1-hour candles have given me an even cleaner exit, but this is pretty damn clean on the daily, okay? And I don't want to scroll back too far on the 4-hour and the hour, but this is how you use this indicator on multiple time frames. Okay, so now, what do I know about this 9? Now, normally, under normal conditions, I'm looking at this daily 9, and the first thing I'm thinking is, hey, this should only be a 1 to 4 candle correction. And then we go into this countdown that I'm going to get to a little bit later. But the weekly is on a 9 itself. So I'm not really, now I'm looking for a 1 to 4 week correction. So if I'm a trader trading daily candles, I'm not looking for a 1 to 4 day correction. I'm looking for something more substantial that ideally gives me a 9 on the bottom. in order to time a trade. But now I didn't get the 9 on the bottom, but something interesting is happening here, right? So in reality, and this is where a lot of discretion is needed, and you're not really, this is why this indicator is very hard to code. How was the guy that invented it able to come up with this system? Well, because historically he took a look and back tested and realized, hey, there's only so much momentum traders have. And it's usually about 9 candles of momentum. And then if that is the beginning of a trend, then there is another set of momentum, which is the countdown to 13. But I look at Bitcoin differently. Bitcoin is a 24-hour market. And when you compare this candle right here that flipped the color, the close of this candle, you can see it in the upper left-hand corner, was 905. If you go 4 candles earlier, 1, 2, 3, 4, the close of that candle was 898.5. So the difference between this being a 5 and then 6, 7, 8, and this candle being a 9, the difference is really $7 on something that's 900. And you really got to use your discretion, and you have to realize, hey, this was 9 candles of selling. The selling might be over. Okay, so even though you did not actually hit a 9, if you plot Bitcoin on a slightly different exchange, this could have been a 9. And in addition, if the day was closing not at 8 p.m. Eastern time, but like at midnight Eastern time, this quite possibly could have been a 9 count. Like, these things are just so arbitrary, okay? So I tend to look at it as like, what makes sense, okay? So this looks and smells like a 9 to me, and I probably would have been more interested in buying, especially off of this ascending triangle that I don't even have drawn, okay? But anyway, let's get back to the bigger picture. The bigger picture is the weekly chart that told you right here to look for a 1 to 4 candle correction and then higher. One of the reasons is that if I zoom out to the monthly level, this is the last month of last year. If I zoom out to the monthly level, and I look at the last month of last year, that would have been here. We are in December, and we're on a 7. So I'm not really in a rush to get out because my higher level time frame still has room to get to a sell signal. Not to mention, once again, my code starts 1 candle earlier, so I'm a little bit ahead. Okay, so there's plenty of room on a monthly chart to go higher. Let's go back to the weekly. And because there's plenty of room to go higher on a monthly, my weekly is most likely just a short-term pullback, couple of candles, and then higher. So now we go higher, and once again, I look at this momentum, right? And look at the green momentum. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, right? Yeah, there is one red candle in the middle, but once again, I'm seeing the momentum. The color isn't flip-flopping back and forth. I'm noticing that this was like 9 candles of momentum that ended, but even so, this was way more than like a $7 difference, right? Because this close has to be compared to this close, and it was not going to go all the way up there, right? But this was a huge day, right? So again, if this day closes, half a day later, who knows? Maybe this would have been momentum to a 9. But now we're stretching it. Now we're stretching it a little bit. So I'm not gonna play that. We'll talk about the 13 in a little bit. So let's move on. Once again, when do you pick it up, right? So this 9 told you to be careful. You could have definitely shorted the asset, in this case, Bitcoin, but the numbers stayed green. So right here, where a green number, like even here, right, the green number crossed above the previous green number. Like the height of the 3 was visibly bigger than the height of the two. So the height of the weekly high on January 16 was visibly better than January 9th week. And you can jump back in. Now, there was a color flip known as a price flip, but whatever stop loss you would have set clearly would not have been hit. I mean, your stop loss should have been at the bottom of the candle if you're trading on a weekly time scale. And then the color flipped again, and you can even add to your position. So I like to jump in whenever a green number starts trading above a previous green number. Noticeably.
So meaning that that one that your mouse is hovering over right now would have been your entry, as opposed to the 3 candle?
Right here on the 2.
Okay.
Okay. Now, granted, it could have looked like a terrible trade with it falling the rest of the day.
Right.
Or it could have fallen in the morning and then went up and then down here. I don't remember how the day went, how the week went. This is the weekly candle. Okay. But that's how I would have done it. Now, I also would have done it on the flip side as well. So right here, you see the red line? The red 2 fell below the red 1, which is a short entry. But you have to be careful because your higher level time frame is still bullish. Okay? Because your higher level time frame here, this is the month of March. And if I go to the monthly chart and look at the month of March for this year, the month of March is the one following a 9 candle. But you got to remember, I'm a few candles ahead because this one had multiple 9s in a row. So I'm now a few candles ahead. So yeah, so that could have been a short play, but it would have lost you money. Not everything's perfect. But you have to recognize that this short play would lose you money, and probably somewhere around here, you just take your losses. Now, when do you go back into the bullish trade? Well, this 2 is clearly trading above this 1, and whatever money you lost here going short, you more than made up for it on a move from 1,300 to 3,000. All right. So let's talk about this one. Okay. Well, we'll get to the 13 in a little bit. So now, once again, you're going up, and there's a couple of good examples here. So here's your weekly. And you're going up, 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 and you hit a 7 with a monster candle in the middle of the week, right? But you're also watching your daily. So this 7 is the week of May 22nd. So let's go to the week of, and you can just glance at the daily chart, and you can see how these 9s lead to short-term pullbacks, and then we go higher. Mostly because the weekly is very, very good. And then you had another 9 here, leading to a more sustained pullback. So let's see what happened on actually April. This is that same month of March 2nd. So if I go to the week of March, that's this, March 6th, right? So there was a 13, which I'll get to. This was almost a 9. It was 7. It was not 7, but it was like a bunch of upside. And this is the week of March 6th. But on your daily chart, you had a 9 on March 2nd. So a few days earlier. And then the daily and the weekly kind of told you to be careful. And then it wasn't very pretty. Now, you could have got whipsawed going up and down. This was also a volatile period. This candle here is the ETF announcement by the SEC on Bitcoin. And then over here, I even have a note that you don't see, but it's Bitmain announcing their support for the hard fork and Bcash. At the time, Bitcoin Unlimited. Okay. But what I was going to get to was the week of May 22nd. This is the week of This is May 4th day. You also hit a little 9. But the really interesting one, and there is another 9 here. Again, throughout May, here's your weekly. All throughout May, these are weekly. May, the first week of May, second week of May, third week of May, fourth week of May, fifth week of May, 5 weeks in May, right? All these weeks, you're bullish. I mean, your bullish entry was right here on the 2. So you're bullish. If you missed it, you could have re-entered on the 3. Very bullish here, right? So all of these daily 9s that show up are just short-term warning signs, but nothing major. Now we get to an interesting one. Now we get to a 9 that happens to be at the same day as a 13, and I'll get to the 13s. And this is May 24th. This is happening right here on the week of May 22nd. So the price is shooting up. Now, what do we know? We know that weekly still has 2 more weeks of upside, and this is only Tuesday. So it's basically 3 more weeks of upside. And Bitcoin trades every day, so we're talking 19 days of upside here, right? And so that's why when this 9 comes, you're like, well, it's probably still going to be a 1 to 4 candle correction because there's more upside on a higher level time frame. And look what we had. You had a pretty substantial 3-day correction. I mean, the high was 2,700 and the low was 1,800. But it's still just a correction. You can short it, you can make money shorting it, but you have to realize that, hey, there's probably more upside. And the upside comes, and if you're conservative, when do you go back in? Well, right here on this little green line. You had the 3 candle started trading above the 2 candle because the 2 never traded above the 1. You want the confirmation of a price flip. So the first color changes the price flip. You need a higher high to jump in. Okay. Now, there was actually no short entry here at any point. Now, you could have shorted off the 9, but this red 2 never traded below the red 1. And the red 3 never traded below the red 2. So the daily candles never told you to officially short the asset. Okay? But it had told you to officially go long the asset right here. And now you're going up. Now it's getting more interesting because the week of June 5th, your weekly is on a 9. Let's see what's happening daily. You had a 9 on June 7th. So 2 days into your weekly 9, you run across a daily 9. And this gets very interesting. Okay? Now, okay, well, I was looking for a 1 to 4 day correction off of the previous 9 because it was aligning with the weekly 7. This is aligning with the weekly 9. So now you are looking for a much deeper correction on the daily candles. And if you're lucky, your daily candles will give you a 9 buy indication somewhere in your 1 to 4 week correction. So the weekly starts to correct. And here's week 1, week 2, week 3, week 4. Now also notice that even though this is definitely tradable to the downside, this is where the price flip happens. The red 2 never trades lower than a red 1. On this week right here is when I finally announced on Twitter, hey, Bitcoin's a short. The moment this week started trading below the previous week. And people were panicking. This is like, Bitcoin's never going to scale. It's never going to get segued. And on Twitter, I said, hey, Bitcoin's a short right here. Now, it didn't last long. It only lasted a week, but the price dropped from about 2,500 and it bottomed out at 1,800. That's a $700 move. That's definitely profitable. Now, on a daily chart, I was looking for a deeper correction. Now, when this was coming to an end, I took notice of this 9. And again, on Twitter, I pointed it out very, very clearly. This 9 right here. And even though this 9 did not have a reversal candle, the week after was a reversal candle, and it took place at the bottom of the channel. So I was looking to prematurely announce that there is definitely a buying opportunity right off of this candle. Now, traditional reversal patterns off of dojis and spinning tops is when the following candle trades higher than the previous candle. So this was your first indication to buy. Now, in reality, what I was saying and what I'm seeing is, hey, this is a tradable reversal off the 9, off the trend line, off the reversal candle. But your weekly candles have flipped to bearish. So the most likely outcome is a 1 to 4 day correction, and then probably lower in order for the weekly to get to its 9. Hopefully not too low. But this is where a trader goes in and then reevaluates after 4 days. But what happened on the 4th day? On the 4th day, Segwit got in, or expectation of Segwit getting in. On the 4th day, Segwit was getting in. So therefore, the bullish trade held and you go up. At that point, you had a flag pennant, which is very bullish, inside of a ascending triangle, which is also very bullish. So at this point, your weekly had a color flip, and once again, the 2 never traded above the 1, but the 3 traded above the 2. And boom, a buy signal. Now, if you set a bad stop loss, if you didn't take profit, you lost. You didn't make any money. But this was a buying opportunity on the weekly chart. On a daily chart, you should have bought around here. You could have added to your position here. Now, the daily chart gave you a few warnings. Gave you a 9 right here on 8/11. Let's take a look at the week of August 11th. That was right here, right there. A nice positive week, no reversal candle. The reversal candle came the candle after, but now we're going higher. Here's another interesting situation, and we're almost at current levels. Now we have a weekly 7. This weekly 7 instantly reminded me of this weekly 7, the one we already talked about. Now, this weekly 7 was hitting a daily 9 with a pretty substantial 3-day correction, followed by more upside into a 9. This weekly 7 was also hitting a 9 that week, right here. September 1st. Zoom in. I know I got a lot on this chart at this point. Should probably drop the Fibonacci's. So right here is September 1st. This is the week of August 28th. So September 1st is, 3 days into the week. So middle of the week. So in the middle of the week, we're about to hit 5,000, but it's a 9 and a 13, and I'm going to talk about a 13 soon. This gave me the confidence in saying that, hey, we're probably not going to break 5,000 right now. We're going to have a 1 to 4 day correction, and then we're going to go higher and then break 5,000. I was assuming that this 7, 8, and 9 that never came was going to look like this 7, 8, and 9. So at the time, I called for selling right here off the 913. Now, I had already reversed this into bullish. This fell for no real reason. Then over here, China announced that they were going to ban ICOs, and I saw it as a good thing for Bitcoin. You had this reversal candle with a nice long wick, started to go up. Now this too started trading above this one. I'm all in. I'm 100% bullish at this stage. But then the next day, reports out of China saying that they're going to ban Bitcoin exchanges. And shit kind of hits the fan. So at this point, things aren't looking so rosy. So yeah, this bullish trade certainly lost you money. When do you cut your losses? Well, worst case scenario, if you didn't set a stop at the bottom of the entry candle or the bottom of the previous candle, you'll certainly be out of this position the moment there's a color flip. Because guess what? According to the daily chart, once the red 2 starts trading below the red 1, it's a shortable play. All right? Still with me?
Yep, still with you.
Excellent. Let me know if you have any questions. So on a daily chart, this is shortable. Now, this is September 10th. Let's look at the week of September 10th. That's the last day of this number 8 candle, and it's not looking too good. Now, this was still a 9 when the week of 9/11/2017 started. And it was a 9 telling you to be careful. Now, the week ended on a color flip. But your daily already warned you that things aren't looking very hot. And we started to fall. I was able to call the 3,000 potential reversal, but for other reasons. Mostly because we've went 3,000 was the previous high. We went to 5,000, so the previous high became awesome support. But you did get a 9 buy indication 2 days later. Okay? And the weekly chart kind of broke and reversed, but look at the weekly chart. A red number never traded below a previous red number. So this was a way stronger situation than what happened back here. This was a lot weaker. This gave you a shorting opportunity on the weekly candles. This did not. The 2 never traded below the 1. The 3 never traded below the 2. And on what day? And on September 17th, you got a potential buying opportunity here. Okay? September 17th was the last day of this candle. So it was already a reversal candle with a nice long wick along the bottom. Okay? Now, a couple of things going on here. So the 2 never really traded above the 1. But you were already up so much. I mean, this was, you could have zoomed in to deeper time frames and probably could have found very good entries, anticipating a reversal. Now, on a daily, the 2 never went below a 1. The 2 never went above the 1. The 3 never went above the 2. Now, the red 2 did go below the red 1. So if you did take the short trade here, you lost money. But you would have made up for it because your bullish entry was here when the 2 is borderline trading above 1, but the 3 is certainly trading above the 2. And all of these losses would have been made up for. Okay? So let's finish this up before we get to the 13s. And here you never got a short entry, and right here you had a color flip the week of October 2nd. And the following day, the week of October 9th, started trading above the prior week. I was very vocal here saying, hey, it's a buy on a weekly level. Okay? And this is the week of October 2nd, and the daily indication, the buy was September 27th with an additional buy after the 9 short-term pullback was right here when the 2 started trading above the 1. And on other exchanges, this might have been a green 1 with that being a green 2. But either way, around 4,400 on September 7th, the daily was giving you buying, the weekly was giving you buying, and off we go. Okay? When do you start to worry? Well, once again, the daily 9 came on October 15th. October 15th was at the end of this week, but you're on a 2, you're on a buy. This is strong. So the moment you're hitting this 9, you really are looking for a short-term 1 to 4 day correction followed by more upside, and that worked out beautifully. Now, right now, the count just got broken. So as of, well, today's, I mean, this candle started about 10 minutes ago. So as of today, you had a color flip, so your daily is now neutral. If the red 2 goes below the red 1, your daily tells you to short, but your weekly is still going strong with the green 4 in anticipation of the green 9. Okay?
Got it.
That's pretty much it. Now, if I keep zooming in on other time frames, like for example, here's the 4 hour. Sorry, here is the 4 hour. And let me turn on the back test so you can see all the numbers. The difference between the two, by the way, is that one of them only shows you the most recent numbers and one of them shows you all the numbers. All the numbers are useful when you're doing, historical stuff. So, you know what, let's just go with the low, right? So, recently, what hour is this? There was a 9 buy indication right here on 10:18. So 10:18 at 4 p.m. Eastern time. So if I go to the daily, here is 10:18, right? So you know that the 9 is inside a bullish weekly trend, and you're looking for a 1 to 4 day correction. And here it is, 1, 2, on a third day, price is crashing. And at 4 p.m. on that day, you hit a 9 on a 4-hour chart. So you should be paying attention because, hey, this might be the end of the 1 to 4 day correction. All right. And then you can zoom in further with the 1-hour chart and see if it's even giving you a 9 somewhere in this area. Okay, I'm not going to do that, but this is the kind of stuff you would do in real time. You would just, I would select my trade based on monthly, weekly, daily, and hopefully they're all in line. But if I'm trying to time an exit or time an entry, yeah, I'll go into lower level time frames. Okay? So there's 2 things left to talk about. One of them is this concept of the countdown. So the way the countdown works is, let me move back a little bit. When you have a setup and the setup does not lead to a significant reversal, so either this 9 is the beginning of an uptrend or only a 1 to 4 candle reversal and then new uptrend, it kicks off a countdown with a different math formula that doesn't have to be consecutive. You can skip candles. And you can review the math rules, it's right here, the countdown. So it's 13 price bars where each close is greater than or equal to the low. Sorry, each close is greater than or equal to the low of 2 price bars earlier. So the math rules are public. So once you know you have to jump back into your bullish trade, you're now watching the countdown for exhaustion of the up move that the 9 kicked off. And it's very interesting that it came right here. So this candle basically tells you, hey, whatever this 9 started has ended. But this 9 started another countdown. So below this 9 is a 1, 2, 3, 4, 5, 6, 7, and that's why this begins on an 8.
Interesting.
And then this 9 exhausts its continuation on this candle. Now, it didn't do anything, but that's okay, because you were smack in the middle of another bull run to a 9. Now, this 9 has kicked off its own countdown. And this countdown is coming to an end very, very soon. It's already on 11 of 13. Okay. Now, in traditional markets, this is a lot more, watched. In Bitcoin, I haven't seen this all that useful, but I'm a big fan when a 9 and a 13 happen to fall on the same day. Because this means that momentum that got kicked off by this 9 happened to end on the same day as a brand new setup. And these are known as 9-13-9 and are very, very watched turning points. Now, the 13 can happen on the day of the 9 or before the 9. But if the 13 happens after the 9, then there is another 13 count already on its way. So it's not as strong, right? But when you have 13 counts, like right now on a daily chart, you have several 13 counts. You have see this 9, started a 13 count a couple of days later because this candle did not meet the conditions to start the 13 count the day of the 9. But then there was another 9 that started another 13 count. So when this daily does reach a 13, there'll be another 13 in the background. All right. Now there are conditions that remove this 13, and they're explained in this math thing. So there are 2 conditions that turn off the countdown. So you have a new setup in the opposite direction, right? So if this creates a 9 to the downside, then this will never complete. This just stops. These numbers should really disappear, actually. But they stop because you can only have either a bearish 13 or a bullish 13. You can't have them both running at the same time. Another condition that I don't yet have programmed in the code, but I need to, is this condition. If there is a close that exceeds the intraday high or low, right? So even if, for example, we don't get a 9 to the downside, but we get a candle that closes below the low of this 1, because that's basically the lowest point. So if we get a candle that closes below this 1 here, then this 13 count from this 9 also stops. Okay? So that's pretty much it. So the 13s are just a continuation after the 9, and they give you a reason to stay with the trend. One final thing on this indicator I want to talk about is that traders trade it very differently. Some traders, like myself included, I always assume that a 9 is coming. Now, you should never short cryptos. You should never short Bitcoin. So I would really be cautious about, like, in order for me to go short, I would need, a weekly like this. Like, I would not be shorting Bitcoin unless, like, I would never short Bitcoin anywhere here other than on very short-term perfect things, right? Like I would need a weekly confirmation, and then I would try to time it daily. It has to be a perfect short trade. But many traders, I call it the chop, like choppy waters, right? So, for example, this 9 was a very clear sell. So a trader would probably try to make some money on the dip. They'll probably go back in looking for a monster move. But when they got taken out of this position, they probably will not enter the short trade here. They'll wait for the 9 and go long. And then they would wait for a 9, take their profit, maybe profit short term on the short, then go back in long, riding into this 9. Now, once again, on this 9, they would potentially short, knowing that it's going to go back higher, going long. Right here, they got stopped out of a trade. They're not going to trade the choppiness of it going up and down, up and down. They're going to wait for a 9, because a 9 gives you so much information that it's not worth it for you to trade. And this is why the lower term, like the short time frames, don't make sense. Like this is just choppiness. And traders don't like to trade choppiness. They like knowing what's going on. So you can trade, 9 sell into 9 buy, into 9 sell into 9 buy, or you can trade a 9 into a short-term pullback, into more upside, or you would, trade take your profit on a 9, realize there is no pullback, and then get back into the upside. But the moment color starts to flip between green and red, that's it. You just wait. You wait for the 9. And back when I was using this, I was literally on like an alert. Like I would only get alerted when a 9 was coming. Like I wouldn't get alerted like it's when things are being choppy. Like
so
only
you're
when a 9 is coming.
waiting for 9s.
Hmm?
You were waiting for 9s for confirmation.
Well, no, I wasn't. I like to assume the 9 will always be there, right? So
Okay.
I would trade this choppy waters, but only on daily and weekly, and preferably monthly. Right?
Okay, gotcha.
But some traders wouldn't even do that, right? Like some traders would not even trade the daily once it starts to get choppy up and down. Like, let me give you another example. Like you would trade after this 9 because you'd realize that you're going higher. Okay, here's a better example. You would definitely trade off of this 9, but a new 9 didn't come. So sooner or later, you got stopped out of your position because the color flipped. But you would not short here. See, the red 2 went below a red 1, but it didn't come off a 9. It didn't come off a 9 sell signal. So even though you bought the asset here and you profited, this would only take you out of the trade. At this point, you will never trade this asset again until either a 9 buy or a 9 sell shows up. Does that make sense?
Yeah, it makes sense. It's just, I guess the question is what. So you would use.
Well, you wouldn't use anything.
When the 9 doesn't come, then you pretty much you sit on your hands, you wait.
Correct. You look for other assets, right? Because in the traditional markets, there's always another stock with a 9.
Right. We don't have that luxury here.
Right. So if you're only trading Bitcoin, you got nothing to do. But like I said, some traders, like you would trade this red 2 below the red 1, assuming a red 9's coming.
So what about the red 4 there with the green
candle right here?
Yeah. But that's not. You would want that to be a green 4 for you to enter back long.
Well, correct. But this would probably I would probably have a tight stop loss. Remember, you shouldn't be shorting Bitcoin, right? We're pretending this is any asset, right?
Yeah, right, of course.
We're pretending this is an asset that is shortable. So once this 2 started trading below the 1, you can short it. This 3 even went lower than a 2. But at some point, you got to set a break-even stop loss.
Yeah, right.
So even this red 4 candle still keeps you in the green for the trade.
The short trade, right.
The short trade. At some point on this candle, you are out, whether it's in the beginning of the candle, in the middle of the candle, or at the end of the candle. And if it's at the end of the candle, you lost a tiny bit of money.
Gotcha.
Now, when do you go back long? Well, the 2 never traded above the 1. The 3 never traded above the 2. So you're literally waiting for the 4 to go above the 3.
Gotcha.
Now, I wouldn't wait too long. I mean, if you're getting up to a 5 and a 6, you might just want to wait.
Yeah, right, of course.
Okay? But your entry is here on the 4, but the following candle, the color flipped again.
Right.
So once again, either you're out break even or you take a small loss. Now, the 2 never went below a 1, or maybe it did by a penny, but not enough to short it.
Yeah.
Color flips, the 2 starts trading above the 1, you're in. Made good money into the 9. All right?
So when you're looking at the hammer on the 2, how quickly, that's the toughest thing, because it's hard to say when you would and would not enter the trade as the candle's getting started. I mean, it's easy to look at it now, but on the green 1 where the color flipped, how quickly are you ready to pull the trigger to go back long?
Well,
if you wait for the candle to end, then you've missed, in this instance, missed $200-300.
Right. So there's a couple of things going on here. So let's first talk about this candle here, right?
Okay.
A lot depends if you're short or not, right? Because if you're not short, you're looking to buy.
That's a nice signal, right?
Right. If you're short, your ego is getting in the way, thinking that it's still going to go lower.
Right.
Right? So you got to keep that in mind, right? You got to keep in mind, are you in a position on this candle?
Right.
Okay. So let's assume, let's skip this one now. Let's talk about this one. So this hammer is irrelevant to me because 2 days do not make a trend.
Okay, gotcha.
Let's start there, okay? However, what is relevant to me is that I'm already behind on this flag pennant that should be shooting me up $600.
Right.
And I'm also seeing this triangle being formed. So I'm already itching to buy.
I see.
Okay?
Yeah.
So I may just start my trade the moment we're trading above this candle.
Above the top of the wick.
Right, for reasons other than this indicator.
I see. I gotcha.
Right? Now, the following day, the indicator helps me, and I'm like, oh, beautiful. Now I have reason to buy more. And the next day, I tweeted this out as early as I could this day, and I caught the triangle breakout.
Right.
So this is when you really go bullish.
Right.
And at that point, you wait for the 9.
Okay. I was going to say, so in that case, you wouldn't necessarily wait for a break of the ascending triangle. You could have gotten in sooner.
You could have, but not with your whole account.
Oh, right. Ease into the trade. Okay.
Right. You could have eased into the trade. See, the same thing here, right? I tell people, I would have started, and honestly, if you look back at my Twitter, I was telling people to buy this 2000 spot even the day before.
Right.
But if you wanted to wait for this candle to complete, you're buying on a red too, because this is for other reasons.
Right.
This indicator just helps you confirm here. And then again here.
Right.
Okay. And now, once you're in this trade, remember, I'm only talking daily now. You still have a weekly to make sure you're on the right side of the trade. Once you get to this 9, there's no reversal candle here.
Right.
So there's no reason to jump off the trade. And once it continues to go up, you can now ride the continuation countdown.
So then you would start looking at the continue. So from the 9, you would start the 1 count, and you're looking for the 13. So that I guess that was my question, is to know how long you can stay into a trade after catching a 9, assuming it doesn't start a reversal. So that's a bullish candle on the 9. Let's call it August 11th, and then you'd start your count. I guess it's tough to say how long you would wait until your next time that you'd take profit. You'd wait for the 13 count or no?
Realistically, this made it up to a 6, though I am a candle ahead, right? So realistically, I was waiting for another 9.
Well, right.
Right? Now, it didn't
What do you do when the
come.
9 doesn't come? Yeah.
Right. It pulled back a little bit, but this wasn't really all that scary except this candle.
Right. Yeah, I'm
Right?
sure that looked terrible at one point.
That looked terrible, but even so, it was a 5 getting close to a 6, right? Getting close to a 9 buy indication. Now,
I see what you're saying.
this
Yeah.
did look pretty terrible, right? Now, this is August 22nd. Let's look at the weekly chart. August 28th is here.
So you
So
were on a
August
6.
22nd is second day of number 6.
Yeah.
So your weekly, now this did look scary because that's a reversal doji,
Yeah, right.
right? So sure, it looked scary, and guess what? Even if you rode this, if you never even exited, and this price flip is starting to scare you, consider yourself happy that you exited like $1,000 later.
Right, you're still good. Yeah.
Right, you're still good. And then this is a monster hammer.
Right.
The price flip is coming. You go back in, and the fact that you still have a few candles to a 13 is helping you get back in.
So would you have went long on the red 6 after you've gotten confirmation of the hammer candle? Basically, you wouldn't have had to wait for the green 1.
I wouldn't have, because I probably would have got in on this red 6 because this red 6 probably wasn't even a red 6 all day, right? Because
yeah, that's true.
1, 2, 3, 4, right? So the moment this price started trading above the close, above 41.45, and this got as high as 41. No, wait. Close is 41.45. The high is 42.55, right? So this went $100 into a green 1.
Yeah.
Right? So I would not have waited. I would have just jumped in by traditional hammer rules, trading above the 5.
Gotcha.
Okay? And then I would have reevaluated at the end of the day. I would have, at worst, my ticest stop loss would have been the bottom of the candle going into the next day.
Mm-hmm.
A looser stop loss would have probably been below these wicks.
Gotcha.
And the next day I had a price flip. The next day I had a 2 trading higher than the 1. You can add to your position.
Gotcha.
Then the number stayed green all the way into a 913, and then you take your profit.
Okay. So 913 is just such a nice trigger to look for.
Correct.
Yeah,
Correct.
I got you.
Okay. So these are just some of your how to try and time these trades. And again, you also have the lower level time frame to try and help you. Like, let's see, this is 8/22. Let's take a look at the 4-hour on August 22nd. I don't know what to expect here, but we might as well. August. Oh, wow. We have to go back a long way on the 4-hour here. I'll zoom out. September. Okay, it's not that far. Maybe it'll be interesting, or maybe this is a waste of time. I have no idea. There it is. August 22nd.
Oh. Bye.
Oh, wow. Oh, wow. Look at that.
Yeah, that's
like
interesting.
I had no idea that was coming, right? I really, really didn't. Holy shit. Right. So as scary as that day looked, here's your August 22nd, and the price is crashing. But if you're curious what's going to happen, we're going to a lower level time frame. and there's a giant hammer on the 4 hour,
Yeah.
and lucky or not, there's a 9. All right,
Yeah.
and boom, you start buying above the hammer.
Mm-hmm.
If you really want to jump in there early.
Right.
And same thing here. See, you going up, 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 up. You see how this is an 8 followed by a color flip?
Yeah.
But this was a 9 most of the candle. Like, this didn't turn into a red 1 till you started going below the close of the 5.
Right.
So the majority of this candle was a 9, and you have plenty of time to get out at the top.
Yeah, I see what you're saying.
On this 4 hour chart.
Yeah.
Okay, and I can be scrolling back for a while. So,
yeah.
Actually, I can just do this. Takes me right to the front. So I think I had one. I think I had one more thing to mention about this indicator. I'm trying to think what it was, but no, I think I already. I think I pretty much covered it all. I told you about the choppiness. So what other questions do you have?
So, like, if we're looking right now in real time,
yeah,
you're waiting for a 13 to show up on the downside. Potentially.
No.
No? Okay.
And here's why. This is that thing that I said I need to program into my code. See, there was a 9 here, but one of the conditions that cancels the countdown is a close higher than the high of what made the 9. So the moment this candle number 2 closed above the high of this 1, and it clearly did, this 13 count should have been stopped by my code.
Oh, okay, gotcha.
Okay, so unfortunately that's not in the code yet. Now, if this was a 9 candle, it would have done the job.
If that were a 9, okay, right.
So
that started a new 13 count for the...
Because it would have started a 13 count to the upside instead.
Yeah.
Right? Which also would have been kind of negated on this candle here.
Right.
Right? Now, also keep in mind, and this is what I mean. Now, this is the 4-hour time frame, so these 9s aren't as critical. So to me, this is pretty much a 9 because it kind of was most of the candle.
Yeah.
Right? Now, look at this here. 1, 2, 3, 4, 5, 6, 7, 8. How close is this to being an 8? So you go 1, 2, 3, 4 candles back.
Yeah.
The close of this candle, 56.58. The close of this candle, 56.85. It's enough of a difference, right? But this has a 9 candle down momentum. So it's possible we could be short-term reversing here.
Oh, because we have a doji right there too. Oh, I guess there's still 3.5 hours left.
Yeah, still 3.5 hours to go, right? But in general, your 4-hour chart isn't telling you much.
It's just helping you with the timing of the entries and exits, I guess.
Right. Now your daily is in neutral mode because, like, if this 2 starts trading above this 1, then the daily goes into short play.
Okay.
The daily is at a short play, but remember what I said. A lot of traders don't like to trade the chop. They would have taken profits off the 9, potentially shorted the 9. There was actually a perfect 9 here on the 4-hour helping you buy it. Right. 1 to 4 day correction back to the upside. Once you get stopped out of this trade, that's it. You're not going to flip-flop back and forth at that point. You go to other assets and you look for 9s.
Right, you're waiting for the next setup. I got you.
Right. So, but your weekly is telling you not to worry yet. And the week is not over. It's only Tuesday. Or Wednesday. What's today's day?
It's Tuesday.
It's Tuesday.
24th.
Right, so it's Tuesday, weekends on Sunday. So we're not even halfway through the week.
Right, that 4 could look
Right.
tremendously different. Right.
Now, that 4, in order for that 4 to be a red 1, man, this thing's got to go all the way down to like 4,300.
Right.
Right? So it's got to fall like $1,000. But the next candle, doesn't have to go back as far, right? Actually, the next candle have to go back far. It's this 2, right? So this is where the 5 candle becomes really important.
Right.
The 5 candle is pretty critical. Maybe on a daily it's more defined. See, the 5 candle is critical because in order to get a 9, you compare to a 5.
Right.
So if the 5 is, a bit low or kind of like this where it's flat,
Mm-hmm.
and the 6 has a nice day,
Mm-hmm.
it's really easy to make a 9.
Right, because it only needs to. Yeah, I got you. I got
Right.
you.
But when a 5 candle is this giant up day, it's a lot harder to get a 9.
Right.
So a 5 sets up the 9. Like here, like this is the 5 candle you want to get a 9, not this.
Right.
Right? But it's a double-edged sword because a 9 leads to downside. So in a way, by not getting a 9 here, you potentially saved yourself from a giant reversal.
I see. I see.
By not getting a 9, you set yourself up for a 9 in the near future at a higher level.
I see what you're saying. So that's why you're looking for it to go above 7,000 because you're still waiting for a 9.
Correct. See,
I understand.
This 9 led to a pretty damn big move. I mean, this went from 3,000 to 1,800.
Right.
Now, this also led to a pretty big move, but it wasn't as scary because look at this giant rebound right there, right?
Yeah.
But so breaking your count and not making it to a 9 is not necessarily a bad thing. It's just, but for most traders, professional traders, they don't look at it like they wouldn't be trading it. They'll just keep waiting.
I see. Yeah.
Right? Or if you're in the trade, if you traded the countdown, you're like, oh great, there's no 9, I'm still waiting for my 13.
Yeah. Right.
Right? So you're still in this trade. Like if you entered back in and you're watching the countdown, you're like, oh, beautiful, there's no 9, I have nothing to worry about, we're going to my 13.
Mm-hmm. Yep.
Okay, so not getting a 9 is not necessarily a bad thing if you're in the trend.
Gotcha.
Okay? Oh, this was the last thing I wanted to talk about. So this is the book.
Yep, I got it.
The other thing I was going to talk about, hold on a second here. And I don't really talk about this much. I should probably focus on it a little bit more. But in this presentation, there is a pretty neat concept, and the book describes it a lot. Where is it? I think it starts on like page... the trend, okay, the TDST, okay? Each time a market completes a TD setup, the true price extreme of that move, known as the TD setup trend, okay? So what that is if you look at this, right? You see this move to the 9 on the upside?
Yeah.
You take the lowest point in what made the 9 to the upside, and that's your support. If you make a 9 to the downside that stays above support, it's more likely to be a full-blown reversal than an extension to a 13.
If it doesn't finish below.
Correct.
Okay, gotcha.
And the opposite on the upside, right? Like you see how here, the downside 9, it doesn't have to be a 1, by the way. It could have been a 2, whichever one is the highest. It created resistance. And now if you form a 9 above it, it's more likely to continue up off the 9 then reverse.
Gotcha.
Okay, so and they have the opposite examples here, like here, right? You had a 9 to the downside, right there, and then you have resistance, but then your 9 to the upside cleared the resistance.
I see.
And then it kicks off the 13. Now now Bloomberg does it differently. Their light numbers are the countdown to 13, and their dark numbers are the setup. But see, they just do it below the candles or above the candles.
Right.
So this is the bullish setup, and the bullish setup led to the bullish countdown. And one of the reasons is because the bullish setup closed above resistance, and resistance is the highest point in the downtrend.
Gotcha.
Okay. So same thing here, right? So this went up and missed it, and then on the way up, it broke this one. So so read over about those, and then there was another concept of price targets, where there's a couple of variations here. Like see all these pluses. You see how this 13 was delayed by like a freaking 2 months?
Yeah.
That happens in some versions of the indicator, where in order to get a true 13, it has to be lower than the 8. So there's the 8.
Okay.
So the 13 has to be lower than the 8. Okay. So yeah, so it's just like this is a good presentation. And there's also additional use cases where you take there's like additional rules, but I think this is the basics. I think we pretty much covered it. But definitely check out this presentation. It's very good.
Okay.
All right. All right. Any other questions? I think this was a little bit over an hour. Tried to get it done in an hour, but hey, I think it's a good video, so I'm glad I recorded it.
Yeah, this was great.
All right. Any other questions? Shoot. Otherwise, I should probably cut the video. So let me know. Should I cut the video?
Yeah. Go ahead.
All right. Cool. All right, guys. Hope you enjoyed it, and if this video comes out, but we'll see. Later.